All right, welcome back to What the Fick, everybody. Been on a little bit of a hiatus, but that's okay. We are back. I'm Spencer Israel. This guy is Ian Cully. He is the head of FICC, that's fixed income, currencies, and commodities at All Star Charts. And Mr. Cully, we've been talking a little bit behind the scenes about commodities, about shiny commodities lately, about gold. To be more specific, you do a very good weekly analysis on gold for your paying subscribers. We're not going to give all that good stuff away, but we want to talk about gold a little bit today. Maybe we'll give away one or two of the ideas that you gave to your members earlier in the week. So that's the stage. It is set. Let's talk about gold. Is it breaking out? Is that the question? Finally?
Well, it's starting to shine. It hasn't broken out to new all-time highs yet, but it's running back to those critical shelf of former highs around 2089. A print above 2100 would really, put the nail in the coffin. We can get behind a big breakout in gold. But we zoom in a little bit, we are seeing some signs of significant strength. And I want to go over a series of charts today before we get to those individual trade ideas. Some of the charts I think are most important that I've been sharing with clients for months now. And of course, again, towards the end, we'll run through some of the strongest names that have already broken out. But first, this first chart, Spencer, looking at gold as a currency. There's that debate: is gold a currency? Is it a commodity? Is it just something to bury in your backyard? I don't have a definitive answer. I think it's, all of the above. But what I love about this chart here is gold in the bottom pane with the euro, pound, and Aussie in the upper panes. We see, the pound retesting all-time lows last year. We see the euro falling below parity. Aussie in a clear multi-year downtrend. Gold just retesting all-time highs for the past few years. And it's doing that now. It's what, $20, $30 below a new all-time high. So gold breaking above that 2100 mark. I think that happens in an environment where the dollar continues to weaken, and we see similar breakouts in the euro, pound, and Aussie, and they start to complete bearish to bullish reversals. So just something to keep in mind. All markets are interconnected. That's the gist of intermarket analysis. Gold does not exist in a vacuum, nor does currencies, commodities, or stocks more broadly. I think one of the biggest or most bullish data points for gold right now is actually silver. It's actually silver. The past few weeks have been, writing about how silver really needs to join the party. Silver really needs to get out there on the dance floor and start showing us what it's got. And this silver gold ratio here in the bottom of this chart is doing just that. We want to see silver outperform gold. It's silver is the crazy cousin. It's that high beta play in the precious metal space. So to see silver outperforming, it's a clear indication of risk appetite, of risk-seeking behavior entering the precious metal space. And when that happens, as you can see, gold does very well.
So silver outperforming gold is actually good for gold.
Oh, absolutely. It's good. It's good for the entire precious metal space. Absolutely. Now here's the zoomed in chart of gold futures, breaking to multi-month highs here. Big candle yesterday for gold. You see an inverted head and shoulders pattern here, resolving higher. I think this could be the launching pattern, sending gold back to new all-time highs. Here's the GLD Gold Shares ETF. It looks very similar to the gold futures chart zoomed out. For GLD, it was all about 185.50. That's the level. Now that it's above 185.50, I like it long up towards 240. And the path of least resistance is higher for GLD. Now, looking to silver on an absolute basis, bouncing off of that 2141 level repeatedly over the past, almost 4 years now. Almost 4 years. Now, yeah, it broke down in 2022. I mean, what didn't break down in 2022 besides the dollar, right? It's all about the dollar and rates. So silver getting hit last year, recovered, and continued to find support at this critical level, and is now challenging this multi-year downtrend line. Now we're zooming in. It's finding support around 2220, and this right shoulder, potential right shoulder of another inverted head and shoulders pattern. If and when silver futures are break back above 2650, I really think it's off to the races for silver on an absolute basis, and for precious metals more broadly. Above 2650, initial target around 30. I'm looking at 35. I think we're getting back up to this critical area of former highs going back to 2011, 2012, and 2013. I think that's where we're headed for silver if and when it's above 26. For SLV, 2650, similar level here. Now we got a polarity zone, former shelf of lows from similar time frame, 2011, 2012. Now that acted as resistance in 2020 and 2021. So back above 2650 for SLV, and we're targeting 35. So levels very similar between silver futures and SLV. And SLV is an excellent way to take advantage of a rally in silver. Now moving on to gold miners. Now that's gold miners.
That looks like a breakout to me, man.
Yeah, right. It was on the chat earlier today, and you were asking me, hey, is it a little too early? Is it really too early for some of these miners? Like, I don't think so. It's hard not to get behind multi-year highs or fresh 52-week highs. Now, that's not what we're seeing in GDX. It's not what we're seeing in GDX. It was a 3-month high in GDX, but I'll take it because this 30 level, it's a big one when we zoom out. Right, when we look at 2013, 2016, former highs here that turned into support after we got that explosive rally in 2020. Now it's been messy. Again, 2022, it didn't break down in 2022. Well, GDX is part of that crew, but now it's reclaiming that 30 level, this critical polarity zone. So as long as it's above 30, path of least resistance is higher, with the understanding that we have some potential resistance zones overhead around 33 and 36. But over longer time frames, I'm looking at 45 for GDX. And if GDX continues to catch higher, which I believe it does, these next mining stocks have a lot of upside potential. Right? Yes, Spencer, they've already broken out. We've given these trades to our clients weeks ago. They're really starting to work now, but lots of upside potential for these names.
Yeah,
you dive into them.
Yeah, I'm seeing it. So let's go. And as you point out that the clients of All Star Charts Premium, they get into research. They, of course, to them, this is old news, but if you're someone like me or someone that doesn't pay attention to, gold necessarily every day, I'm sort of only watching it when it's doing interesting things like it is right now, right? So let's sort of dive in and take a look at some individual names here within the gold space, aside from just, the futures and the GDX.
All right. First up, Alamos Gold AGI. This is probably one of my favorite names. It's been one of the strongest names, hitting an overbought reading on the 14-day RSI, breaking out above 13. That was the level that I was focused on. There was that breakdown this summer, back below about 1150. And we could trade against that level as it coincides with a former resistance. Again, polarity 101, former resistance turning into support. It was messy, but that 1150 level ultimately held. And now we're back above 13. Above 13, path of least resistance is higher towards 20. That's what I'm looking at here for Alamos Gold. And as we zoom out, you see that 2150 levels is also on the table. And I think these names could go much, much higher once gold gets going. Once we have gold back above, or I would say back above, once it breaks the new all-time highs and is ripping up towards 2,500. It's really going to start hitting these more speculative areas like Alamos Gold and these next few mining stocks. Next is Buenaventura SAABVN. I really like this name because it's not just about precious metals, right? It's kind of a 50-50 mix between silver and gold and copper, zinc, and some other base metals. So it's a great play, not just on what we're seeing in gold and silver, but it's a great play on the leadership shift, the rotation out of energy into base and industrial metals that I'm noticing in the commodity space. So this is just a great play on the current themes developing across the markets. As long as BVN's above 875, understanding there is some potential resistance up here around $11, but I'm targeting 1775. I think we get back up there and then eventually resolve higher if this rally in precious metals, and if copper gets going, which it looks like it is, if these rallies have legs. So yep. Secondary objective all the way up around 36 for this now.
Yeah, what I can appreciate here, and a lot of it also is the time span on the chart, right? But these charts they look similar, right? But there's like key differences with each one, right? If I'm just looking at like Alamos, for example, right? Zoom out on that chart. And then you look at compared to Buenaventura and even compared to the one you're about to talk about. Well, the latter two do look very similar, right? But I can appreciate that they're not all at like the exact same point in the cycle.
Yes, absolutely. Absolutely. And that's what's it's a great point. And what I like to focus on again is strength. So the names that I'm highlighting today are just a handful of my favorites, the ones that are showing relative strength, not only versus the broader market, but versus other mining stocks, versus GDX.
Right.
So those are the names we want to be taking advantage of at this point of the cycle. Now, as the cycle develops, as it unfolds, there's going to be other areas like silver miners. Like I think silver miners are the next area to get going. And there's a couple I have in my back pocket that I'm monitoring. Maybe that's for next week or the following week.
Maybe.
But we'll I'm sure we'll be touching on that. If gold's breaking out, if silver's above 26, we're going to be talking about silver miners.
Yeah.
Next up, Eldorado Gold, EGO, wrote a post on Monday called "Don't Let Go My Ego." God, I love that commercial growing up. I love that commercial. Still eat Eggo waffles today, as do my kids. EGO above 1250 or 1225. I think the next target's up around 2550. And again, polarity zone. Former area of support turned into resistance. I imagine that resistance will come in around that level. Doesn't mean it will, but there's definitely a potential for it. This chart also, Spencer, like zooming out on these charts, you get a sense of how beat down these names are and how much upside potential these stocks have. You know, Eldorado Gold was trading at 110 in 2011 when gold peaked. I mean, I don't see any reason if gold continues to rally and get going, and we have another secular bull run for precious metals, why it can't get back up to that level. I mean, that's a big move. That's a big move, and you know, we're seeing it across the space. Here's King Cross Gold, another one I like, above 5.5. You know, new year-to-date highs. You know, closing in on, you know, multi-year highs. You know, you gotta buy that strength. Lower pain, you're seeing the relative trend to GDX. And this is something that I like to monitor. Like, I just don't want to own mining stocks. I want to own the best mining stocks. Yeah. And this is King Cross Gold right now from a tactical perspective. Is that exactly? Zooming out, you know, as long as it's above 550, I think we're heading back up towards 11 and a half. That's my target.
It does seem like every stock you highlight here is either at or damn near close to the levels that you want it to be at.
Mm-hmm. These things are just breaking out. These
Yeah.
things are just breaking out, and that's it's a great time to get involved. It's a great time to get involved. Our risk is well defined. The risk to reward profile for these stocks is heavily skewed in our favor. So these are names that you can still take advantage of, especially, you know, today we're seeing a little bit of a pullback as a dollar finds support. Not surprising. So yeah, we'll see. Harmony Gold, another one breaking out. You know, as long as it's above 550, like it long. Another nice looking base. Also printing overbought conditions here on that 14-day RSI. And, you know, another thing that you might notice for these stocks that I'm highlighting is that there are potential areas of resistance that aren't that far, aren't that far above our breakout levels here. So we could see some, you know, sideways messy conditions in the near term that will provide another entry if you miss these breakouts. But again, if gold's breaking above 2100 and starting to rip higher, I think they just rip right through these former highs. 7.5, Harmony's ripping right through it. Zooming out, looking at around $19-20 for Harmony. Again, as long as it's above 550, I think the path of least resistance is higher. Now, all right. You know,
some good ideas today.
Yeah, and I know, you can come across as extremely bullish right now, and you know, at the same time, definitely want to keep in mind that there's still a lot of overhead supply for, you know, for silver, you know, for gold. You know, gold still hasn't broken out yet. It's getting close, but it still hasn't broken out yet. And there's some other areas in ratios besides silver relative to gold that are front and center for me. And that's GDX relative to the S&P 500. Here we have the GDX XPY ratio. Now, finding support, again, at a logical level, at a shelf of former lows, exactly where we would expect it to find support. Now, recently hit a fresh 52-week low, but it's starting to catch higher. You know, I want to see GDX start to outperform, because the strongest names, the strongest market areas, not only perform well in absolute terms, they also outperform their alternatives. So I want to see that out of GDX. Also, take it one step further to go a little further out on the risk curve. I want to see silver miners outperforming silver, and this is the SIL ETF relative to SLV. Again, finding support at a logical level where it found where it dug in and ripped higher in 2016. Remember, 2016 was a great year to own precious metals, and you see this explosive rally in this ratio coincided with an explosive rally in precious metals. So, I definitely, I don't expect to see something similar to 2016, but I want to see this ratio catching higher. I definitely don't want to see it catching lower.
All right. Look, tomorrow, of course, the end of the month, will we get an all-time monthly closing high in gold? Maybe, and that would be pretty important to you when it again.
Oh, absolutely.
Yeah.
Yeah, definitely. That would be important. We might get a new weekly closing high this week. I wouldn't be surprised.
Or a month.
And I'm gonna go sit and meditate for the next week in the Oregon mountains, and guaranteed, Spencer.
Yeah.
Gold's gonna break out next week.
Because you're gonna be away from everything.
I'm gonna come back. Gold's gonna be trading at like 2,200, 2,300.
From your lips,
that's just the way the world works.
From your lips. All right. So we're taking a 1 week hiatus here. Ian, there was a question in the chat. Will you be at the meetup in New York next week? No, you'll be meditating in the mountains of Oregon. But Ian will be at our meetup in New York in January as part of our Portfolio Accelerator program. If you are in that program, we're meeting up, as you probably know, in late January, the 22nd to the 24th. Ian will be there. If you want to learn how to get invited to that, you can always email us questions at stockmarketmedia.com. Just put Portfolio Accelerator in the subject so we know what you're talking about. And yeah, so 1 week hiatus. Ian, have fun meditating. Enjoy the peace of mind. I will do my best to keep up with all the commodities and the currencies and the bonds and the rates and the yields and the forex and the metals and all that stuff in your stead. We will not be doing a show, but we'll be back in 2 weeks when Ian is back from his retreat. So Ian, enjoy. And coming up next, we have Hot Corner with Steve Straza. So stay tuned for that. Thanks for watching.
Thanks, everybody.